Welcome back, everybody, to Be the Trader. Today, I have a very special guest. His name is Scott. Scott is from B Traders, and long story short, I met Scott just randomly. He messaged me one day and became good friends over time, and he's a great trader, someone that I respect, and someone I'm happy to have here on the show. And so welcome, Scott. Welcome to the show, my man.
Thank you. I'm very happy to be here.
Absolutely, man. Absolutely. So, Scott, if you could start off by giving us a little bit about your background, what got you into trading to begin with?
Well, going way back, I had parents who were middle class. My father was in the Air Force, and my mom was a stay-at-home mom, when we were young. But I got introduced to stocks from them. They weren't rich, but they always talked about stocks. And when I was little, I remember my mom and dad bought me, like, I think it was TWA stock, and they were always talking about Winnebago stock. And so I got exposed to it at a young age. And also, they were thrifty, so I worked from a young age. I mean, I got my first job, I think, at 12. I had a paper route, and it worked basically ever since. They didn't hand us. I had a sister, but they didn't hand us money. If we wanted something, we had to go save our money and earn it. So stocks was always in my mind. Like, it was always like mysterious. How did it work? You can make money from money. So I started. I don't remember how I started getting into books, but I started reading every stock book I could get my hands on. And back then, we didn't have the internet, or I didn't have a computer, so I remember riding my bike to the library and checking out every single stock book in our local library. And when I got older, I would go to, like, the college library, and I checked out every stock book, there, trading or whatever. I just had a fascination with it. And I got drawn into the technical aspect, charting. And at a young age, and I used to get this graph paper and, like, hand draw charts every day, and I had them taped on my wall, and my parents thought I was nuts. But I started, my passion started for it back then. I didn't have any money to trade. And but when I was ending high school, my father knew somebody at a brokerage firm, and he knew I liked stocks, and she was talking about a job opening there. So, like, right out of high school, I started at this company called Prudential Base. My dad's friend got me a job there, and I became what's called a wire operator. And I thought it was great because I could now be around the stock market and learn even more. But when I was there a couple of years, a couple of the brokers kind of took me under their wing, especially this one in particular, who eventually became my partner. And he told me, hey, kid, I like you. Why don't you become a stockbroker? Forget about trading and the market. That's too risky. You don't want to do that. You want to become a broker. So I got drawn into becoming a stockbroker, and but I thought it was good because I could be, learn stocks, meet clients that were good at stock trading, and then eventually trade myself. So I dabbled in it. I didn't have much money when I was a young man, so my first entry into the market, I think, was options. So, and I would just be going long, and eventually I would go long puts, long calls, long puts. I had bursts of success, and then eventually I would wipe out my account. Anyone who trades options know how risky they are. And then I kind of got discouraged, and my career was growing, and I got in the brokerage world, and I was building my business. Eventually, I bought the book of business from this broker who took me under his wing when he retired. So I was doing really well. I was making money, and I always had it in my mind that once I got a nice nest egg, I would, really give it a shot. So I kept studying and studying, and I noticed a pattern back then in the 90s. This is the 90s. I started in the brokerage industry in the late 80s, by the way. Placed my first trade in 1987. And
When I was born, by the way.
yeah, Alex calls me old man. Uh, and I'm 52, by the way. But yeah, so in the late 90s, I was studying and studying, and I accumulated, like, I was single and making good money, and I accumulated like $90,000, and I decided to give it a go. I had been studying different patterns, and I really wanted to take it serious. And I found a pattern that was working back then, just going long and swinging. Day trading wasn't even my head. I had no thoughts of day trading. Um, so it's basically a breakout pattern, but it was low price stocks, kind of like the day one scenarios today. And I noticed that, heavy volume, they break out. There's some follow through. My idea was to, split up the account keep it in 10 stocks at all times, which I did. And I had tremendous success. I mean, I went from, I think, 1997, I started. And by 99, I had grown that 90K to a million or over a million. And I thought I found the secret formula. I thought I had, oh, this is great. And then once I got to that $1 million in the 90s, the late 1999, I was thinking, oh shoot, man, I got this beat. I'm going to go for 10 million. If I can get from 90 to a million, I'll get from a million to 10. Well, I kept doing the same thing, and then 2000 came, and then a lot of you probably know there was a dot-com bubble, which I stayed away from the dot-com stocks until later, but my pattern wasn't working anymore, and we entered into a big bear market. And I had read about psychology and discipline and the mental aspect, but honestly, I really discounted it. I didn't place much importance on it. Couldn't relate to it. I thought, well, that's not me. I'm never going to have a problem. But I had a big problem because once the market broke and started falling and my pattern wasn't working, then I didn't have the discipline to stop. So I started revenge trading. I started over risking, everything you can think of, and it was just a downward spiral. I did have a brief moment. We had a bounce within that time period, and I got the account back to almost a million. But ultimately, it just I kept going. I kept going, and I don't even know what happened. I mean, I know it was very painful. I had a bad emotional experience to it, and I basically lost almost all of my gains by, I think it was 2002. So I stopped, and I was like, you know what? Trading's not for me. I don't know what I'm doing. I can't handle it. I thought I had it beat. And I walked away from it for, I don't know, a year or two. And then I started paying attention again, and it came back, and kind of went back and reviewed what I did and why it happened. And I made a decision at that point that, I need to really learn the basics. I need to learn everything about psychology, about discipline, about risk control, all those things I really didn't know about before in my earlier success. So I kept everything small. So from 2002 to about 2008, so about 6 years, I was experimenting. I was trying different things. During that time period, I discovered day trading, and I really like the idea of day trading because day trading, as opposed to swing trading, when you're holding things overnight or a week or more, you're giving up some control. I mean, stuff can happen overnight. You can wake up one morning and news comes out and you have no control over it. At least with day trading, I feel you do have some control. So my idea was, I still have this passion for it. I didn't want to give up. I wanted to try again. So around 2008, the market we had the financial crisis. And I was miserable by this time in being a stockbroker. I was going through the motions, but I had built up this business and done well at it for the most part, but my heart wasn't in it. After 2008, a friend of mine who was day trading, He was the only one I met who was an actual day trader. Um, he was first a client of mine, and he said to me, he's like, "What are you doing? You're miserable. You love trading. Why are you a stockbroker?" And just him saying that made me think, you know what, he's right. So at that moment, I committed 100%. You know what? I'm going to commit 100% to learning how to trade and becoming a day trader and doing everything the correct way. And I made that decision, and from that point going forward, just worked at it and worked at it. I did journaling. I read more books. I reviewed my trades. I looked at new setups. I did data tracking, everything that you've talked about on your show that everybody hears about. So I kept working at it, and it wasn't an easy road. I mean, even from 2008 until I'd say 2012, 13, I started to be consistent, to where I knew if I followed my process and my setups and my system and was disciplined that I wasn't going to lose money, basically. And even from that point, there was still more struggles along the way. And I'd say around 2014 is when that was the year when everything just gelled. And not only was I completely confident in my methods and my strategy and my risk control and my psychology, that I can see that equity curve, slowly going up, all the time. So that was the journey. And I have to say also along the way that being a stockbroker, they make it very difficult to day trade. So that was a struggle too, because uh, some brokerage firms allow some brokers, but I worked for 3 different brokerage firms in my career, and every single one of them, it's not like they say no, you can't day trade, but they basically make it impossible for you. They don't let you open an account outside your brokerage firm, and then if you are trade inside the brokerage firm, they kill you on commissions. So anyway, that's kind of my path to where I am now.
So I'm very curious on a couple of things. Number one, what what was the main? I know you mentioned a couple of things like revenge. You weren't disciplined. Where you lost. You thought you made it right at the beginning, and then you lost all that. What would be like the main takeaway from that experience in itself? Like if there was something that you took away that really helped you today.
I think the main thing, the number one thing is, well, I'd say psychology, but psychology is hard to quantify. It's definitely important because getting inside your brain and understanding yourself is really important. But besides that, the risk management and risk control. I mean, that was really the key for me because you can't get around it. I mean, I have this because of the bad habits I formed in the 90s. It still affects me today. You can't get around these rules you heard of, like risking 1-2%, whatever it is, of your capital, and having a maximum daily loss. I would always think, well, it's okay this time, or I lost this trade. If I do another one and I break my rules, it's okay. It's not. That's the one thing you have, and that's what they talk about discipline. You have to be disciplined. You have to have risk control in place, or else you are not going to make it. Eventually, you will blow up.
Yeah, no, that makes sense. And what I'm curious though is that experience of you found something that works and it was working really well and then it stopped working. And now what's the difference between now and then? Because now you're finding something that works, right? It's been working for a while. I mean, since 2014 or 16, I can't remember specifically when you start, everything was like perfect, right? It clicked. What are you thinking now? What's different between now and then to where, God forbid that happens again, where that goes away? You know what I'm saying?
Well, that's a good point. Because when I made the decision to focus on day trading only and not swing trading, the other thing I learned is, for me, I I don't want one setup. I have a lot of setups. I mean, I looked the other day. I think I have like 42 setups. Um, and I look at that like it's a diversification. Like you have a diversification of a stock portfolio, I have a diversification of setups. And I don't track as much as I used to, but I track them all. They're all successful at for different percentages at different time periods, but they all work. Breakouts work, pullbacks work, trend lines work. They all work to some degree, but you have to put it into context. And that's another thing I wanted. That's what I wanted to do. In my mind, I want to become the best trader in the world, but best trader meaning best trader to me. To be the best trader I can be. And to me, I want to be able to go to the market each day and look at the market, what's happening, and not be limited to one or two setups. I want to be able to trade anything I want. So I try to be objective and analyze the situation. And any of my trader friends who see me trade, they see, I don't just trade one or two patterns. I trade a lot of different things, and I like that. That's who I want to be.
Yeah, and so that pretty much kind of solves that, where you always have just these tons of tools where you can always fix something or trade something different. It doesn't really matter. There's not one specific pattern. I'm curious. So when you started, or were you always that way, or did you focus on one, or did you just kind of like always kind of just trade? Like, help me understand that context, because to go from 42 setups or whatever it may be to, how was it at the beginning? Was it like I trade 12 or one? Was it even that way of a process of thinking?
Yeah, no, first in the very beginning, I didn't have any setup. I just traded whatever I wanted. Oh, the stock looks like it's going up. Buy.
Yeah.
Uh, it looks like it's going down. Get a put. I just visually, because I had looked at so many charts back then. I had a lot of experience, but I didn't have a defined setup. But the success I had in the late '90s that made me all that money, that was just one setup,
Right.
just
But then
one.
after that, when you came back, what was that? Because it was like starting fresh.
Yeah, it was like starting fresh. I went back to the drawing board. I kept reading, studying, um, getting into price action even more, trying to understand, keep looking at charts. Why did it top there? Why did the trend form and then end there? And I kept journaling and I kept writing in my journal. I observed this, and then this is something to test. So I go back and test it. Then I'd get stats on these different setups. So it was a process. It was a process. It was a process of experimentation, observation, and then going to the market and actually trading. Because it's one thing to do it, on paper and mentally and theory, and it's another thing to actually trade with real money and have losses.
So basically, were you kind of always the kind of guy when you came back to just trading, really just trading, like kind of like just trading what you saw or what kind of patterns? Like it wasn't really one anymore. You know what I'm
I
saying?
I would say not necessarily. I was very. I always from that that experience onward. I always tried to be methodical in what I did. So I wouldn't just do random trades. It'd be a setup and something that I studied, I believed in, and then if it didn't work, I'd go back and try to figure out, was it the setup that didn't work, or was it me? Was it something I did? Did I not follow my rules? Did I do something wrong? It was just a continual process that I went through.
But it seems like overall you always had quite a few tools that you were constantly trying to get better at. And so over time, now you have all the tools still, but now you're better at them.
Right.
Right.
Yeah, I think that's what it is. I look at trading like performance athlete almost. Like a football player, basketball player, whatever it is. There's so many aspects to the trading game. And I believe that the reason it's so difficult is you have to be on point on everything. Like if you have the best setup in the world and your psychology is messed up or you don't have risk management, you're not going to succeed. Or vice versa. If you don't have a good setup, but you're very disciplined, you're not going to succeed either. So you need to be on point on everything.
Yeah, that's a good point. And what I'm curious though, on top of that is there's something, and granted, like some people may not know, but on V Traders, you basically do have a YouTube too, where you share some of your thoughts and opinions, and you talk about confluence on there. Which
Yes.
do you feel like that's a huge part of your trading when it comes to setups, if you will? Like it's not just one thing; it's a multiple of things.
Yeah, that plays in. It is, and that plays into how I risk, because every day when I go to the market, I have a set amount of risk that I allocate, and we know each other, so I know you do too, Alex. So
Mhm.
I have a set amount of risk, and when there's confluence, when there's multiple things lining up, it gives me more confidence in the trade. And if I'm going to risk one full R on that trade, um, I usually only do that if there's confluence. If it's just one thing, chances are I'm not going to allocate a full R of risk on that trade. So that's true.
So how do you think of, because people may hear this and they're like, man, 42 setups, holy crap. And so what I'm curious, because you always hear people like even me push the idea of, focus on one. And it doesn't seem like you did that. It seems like you just kind of focused on all kinds of different ways of trading. And then you over time improved on each way, right? And so, through that journaling process, you kind of eliminated, I'm guessing, things that didn't work. What would you say helped you figure out, like, with tracking all types of setup, how were you able to kind of figure out, okay, these don't work, these, because there's so many, you know what I'm saying? Like, how did you eliminate some, or did you just keep them all and they just all became better, like over time, and they all
No,
improved?
no, I definitely eliminated some. I mean,
Okay.
I right now I don't trade with any indicators, but I used to. I used to for a while I used CCI. It's kind of like stochastics. Um, so no, there's definitely setups that I eliminated, and for sure. And the ones that kind of floated to the top, so to speak, uh, I just keep trying to tweak and improve. But a lot of the setups that there's no magic formula. A lot of the setups that people hear about, there's nothing new under the sun. There's no like secret sauce. We all know the basic setups, but you can get better at entering them, how you risk them, where you get out. I'm always trying to improve. I don't think that'll ever stop. I mean, I'm always working on improving my trading no matter what. It just seems like a never ending process.
So when it comes to, let's talk about entering stocks for you, and you're always trying to improve. What was something that you struggled with at the beginning when it comes to entering stocks, and what is something you've done to improve at that?
Definitely chasing. That was a big difference in my trading. For the most part, I do not. I'm very specific at where I enter. If I can't enter where I want to enter, I let it go. And I used to not be able to do that. I mean, I would say, "Oh, this stock, it's going. I trade long and short, so it's a long, it's going up. What's the difference? What if I didn't get in 25 cents lower? It makes a difference, a big difference. So and it multiplies itself, because not only does it affect your where your risk to, but it affects your profit. So that was a big thing. I use limit orders for the most part. I don't just, and usually my orders are placed in advance. If I do chase, if I must have something, it's just small size. I mean, it's okay. And I do that more for psychology. I also will take a quarter or a third off for profit, at a small reasonable target, also for psychology mostly, because it might not be the ideal exit, but it helps me stay in the trade, and it helps me manage my psychology.
When you're doing that, when you're like taking small off, are you thinking, okay, okay, great. If I take some off now, I won't have that big of a dollar loss. Or what are you thinking? Like, is that what you're thinking? Or what, like, I'm just curious. I don't want to put things in here because I'm just very curious.
It really it's more to manage my emotions,
Okay.
because I like to remain as calm as possible when I trade. I don't want to feel any emotion. I don't want to feel fear or greed. Nothing. I think that's the best way to trade, because when your emotions are, or at least when my emotions are involved, I get screwy. I mean, I
Mhm.
can't think straight. So my goal is just to try to to take the edge off of the trade and keep myself calm the whole time.
Okay, good. The reason I asked that is because sometimes like I'll take some off like a partial, and then sometimes maybe that'll make me start to switch to prevent losses. Like if you take a little off, you're taking some profit. Depending on what you're thinking in your mind, I was curious about, because you could be thinking, I want to limit the amount I lose, so therefore now you're focusing on not losing as much, or maybe you're thinking, I want to keep some of what I'm gaining, so therefore you don't want to lose what you're gaining. Like I didn't know how you were thinking, or if it's more of just part of your process where I just take some off, and then it's just more of just to stay focused on the trade. I was just curious about that.
Yeah, it's more psychology, because I'm one. I like to hold stuff. I'm not so much a scalper. I try to hold the move as long as I can. So, but I also know that when you get in a trade and it starts to go your way, and then it starts to move a little against you, now you start thinking, geez, what's going on? Am I wrong? You start to question yourself. So if you sell a little bit into a push up, if you're long, um, it allows me to just, like, I'm okay. Like, even if my stop gets hit, it's either a scratch or it's a small loss. It's no big deal. So I know that, and it allows me to stay in the trade longer.
Understand. When it comes to like profits, risk reward, what's your thought process on that? Like, are you set in stone on what you always want to gain? Or are you more so set in stone on what you like? Give me an idea of that.
Well, I used to pay a lot of attention to risk reward, and I would pass on trades if it didn't have, I used to shoot for just 3 to 1, 3 to 1 risk reward or more. Um, but, I don't know about you or others, but when you really look at that, I find it very difficult as a day trader to generate 3 to 1. I mean, when you look at where the stop should be based on the chart versus where 3 to 1 is, it's pretty hard to get 3 to 1. So I don't do that anymore. I just look at the trade if it's a valid setup. Most of my setups are better than 50-50 as far as the win rate. Some of them, might be 70%, 80% sometimes. Um, but I'm the type of trader where I like to trade. I trade every day. It's hard for me to go through a day and not trade. If there's no setups one day, and there's a 1 to 1, and I see a good entry, I'm going to take it. That's just who I am.
Interesting. So, and you're right. I mean, like when you find key areas on the chart, sometimes it's hard, which then enforces you maybe to take less and less trades. So, at a time when were you consistent that way too, when you were just only focused on 3 to 1, or what was that like when you tried to focus that way?
Um, yes, but I wasn't happy, because when I just focused on 3 to 1, I would be more prone to what, because I like to trade, and that's who I am as a trader. I'd be sitting there all day and I'm like, oh, I didn't take that one. Oh, I didn't take that one. Oh, look, they're moving without me. And then psychologically, I would go and take a dumb trade.
Hmm.
So I'm trying to deal with my own psychology as well as the methods and systems that I created to try to be successful. And that's, part of this is just getting to know who you are as a
Yeah,
trader, who you want to be. And we're all different. We're all a little bit different, and that's
we're
okay.
younger, we're older. I get it. Like we're all different. I get that. So before we wrap this up, I want to ask you a couple of things. There are two things. Number one, if you could go back, right? Back to, you could choose whether it was in 2008, I think there was a time, or in 2016, I mean, I'm sorry, either time period before, right before you started with the 90 and you made your first million, or right after that where you lost it all. Where would you go back to, and what would you tell yourself to get yourself quicker to where you are today?
Okay, so first of all, two things. I would go back to the Scott in like 1989, I guess, when I got my broker's license, and I would I would tell myself to just at that time just go for it, dude. I mean, when you're young and you don't have a family, you don't have, any big responsibilities, if you love trading, give it a shot. I didn't. I played the safe path. I wish back then I would have really followed my path. That's number one. The other thing is, if I could go back and tell myself in the 90s when I took that 90K and I grew it to 1 million, I would have told myself to really focus on read the trading psychology books, and read every risk management book you can get your hands on, and understand what risk is and how to manage risk and have discipline. So those are the two things.
And my last question is, if let's just say your son, right, wanted to learn how to trade, what would be the first step for you to show him the way?
Well, I have a 12-year-old, and I think when he was 10, his name's Tyler. The older one didn't seem to be interested in trading at all, but the younger one is into gaming. He's into computers, and he was interested in trading. So I didn't tell him, but I gave him a fake Forex account, and with 100,000 in there, but I didn't tell him it was fake. And said, Tyler, here, I'm going to put 100,000 in your account. I want you to try to make it, and whatever you make, we can split it, 50-50.
You better not make a lot.
So, he had some success in the beginning, and then he got really scared. He's like, oh my God. And he was afraid to tell me, oh my God, Dad, I lost like $10,000 and I don't know what to do. Which seems kind of mean, but I wanted him to experience, I wanted him to think that it was real money, but he gets it now. Like he understands trading, and he still has an interest. And, when he gets older, he wants to, give it a real try. So
that's funny. That's so cool.
That's one way to do it.
Thought about that. Yeah, that's a good way to kind of put that reality, but also get that experience. I like that. Well, look, Scott, I appreciate you being here today, sharing your experiences, sharing your journey. And, I know for a fact, for me, I gain a lot of value from talking to you. I know a lot of other people have gained value through your V traders, through your YouTube. If there's anyone who has questions, maybe they want to learn out more, where can they reach out to you? And could you share that with them?
Yeah, absolutely. Anybody can reach me anytime. I respond to every message I get. And I'm on Twitter at Switterman. That's SWITTERMAN. You can just contact me there.
Perfect. Well, thanks so much, Scott, for being here today, my man. It's always a pleasure.
Thank you, Alex. Appreciate you, and I appreciate your show.